Okay, guys. Hi, Zaheer Anwari here. Can I get a quick hello that you can hear me and that you can see my screen as well, please? Okay, administrator, I think we are good to go. Yes. Okay, fantastic. Okay, brilliant. Hope you guys are all well. Um, I know I was supposed to do it yesterday, so apologies for rescheduling and also for the late start today. I've got quite a lot going on at the moment, mainly preparing for a live training session that I'm doing next week. So if I quickly direct you guys to that, if you're based here in the UK and you'd like to attend a live training session that I'm doing in London, in central London on February the 17th, this is the website to go to, which is zaheer.live/seminar. There are a few spaces left. It is £195 plus VAT for the day, but it also comes with a lot of goodies. So you get a whole month of community support. On the actual day itself, we'll go through all the basics through to the advanced techniques where you'd be walking away with a breakout strategy, a pullback strategy. You'll understand compounding, risk management, watch list management. There's training in currencies, there's training in stocks. There's just a lot that goes into it. Okay, so please check that out. If you're not in the UK and you would like to do something similar, then please check out the webinar page. So it's exactly the same, but it's online. Okay, so zaheer.live/seminar, that's for the 17th, and zaheer.live/webinar. You can join that whenever you want. If you're in the UK as well, of course, you can do the online version as well. Okay, so please check out these two websites. Okay, zaheer.live/seminar and /webinar. What you're going to see in the what you usually see in my presentations is more of a technical analysis perspective. What you need to really get into your understanding of trading is that technical analysis is not trading. They're mistaken often to be the same thing, but a technical analyst is not a trader. A technical analyst is someone who can simply break down a chart, know their support and resistance levels, look at what happened 10 years ago and say, right, this could happen in the future. That's technical analysis. Trading is then being able to extract money from the market. So understanding high probability environments, understanding to identify where the money is. Is it in foreign exchange? Is it in stocks? Is it in commodities? Understanding how to enter, manage exits, place a stop loss, how to compound, how to hold your positions, how to apply patience. All of these aspects, that's more of the skills and the traits of a trader. So don't mistake technical analysis for trading. And this is where a lot of private traders go wrong, because they go online, they can find a lot of information on technical analysis. And I have to say at this point that a lot of the technical analysis that you find on the internet is actually quite wrong. It's misleading, it's incorrect. Even most private traders are not actually very good technical analysts. They think they are, but that's because of the information that they are surrounded by, but also because they then end up on a lot of free webinars and free forums, WhatsApp forums, Skype forums, Facebook forums, and the level of knowledge within those kind of communities is not of a proficient standard. And so you got to really be careful of who you surround yourself with. Get your technical analysis on point, then understand how to trade according to you as a private trader. What are the most efficient and most profitable techniques and the most appropriate techniques for you as a private trader? And then also surround yourself with the right people who are able to support you and give you the guidance and the knowledge that you need. Don't allow ego to get in the way and say, right, I know this stuff. My approach to this is very, very simple. The people that attend a lot of these free seminars are generally still looking for something. They may not want to admit it, but they generally are looking for something. The consistency isn't quite there. And so that's why a lot of people end up on these seminars and these webinars. So if you want to get beyond that, what's the word I'm looking for? Where you reach a roof. I've forgotten what the word is now, but a plateau. If you want to get past that plateau, then please check out the following websites. So zaheer.live/seminar, zaheer.live/webinar. If you want to email me, please email me on zaheer@zaheeranwari.com. So if you have any questions regarding anything, please email me on zaheer@zaheeranwari.com. Okay, so it's just my name. All right, guys, let's get into the actual analysis of today. So I'm just going to switch my screen over to my e-signal charts. So I will need administrator, if you could tell me that you can see my charts, okay, please? Yes. Okay. Fantastic. Okay. So what you can see in front of you is my typical chart setup. So regular followers and regular visitors of my weekly FX Street webinar will know that as a trend trader, I'm looking for long-term opportunities in the market. I'm not looking for quick riches. I'm looking for long-term opportunities in the market. I'm looking for growth, and I'm looking for substantial exponential growth. There's a very, very different philosophy to day trading and trend trading. Day trading is when you're in and out of the market trying to make money quickly. It can work if you have got the right funds to start with, and I mean large figures. I'm talking about 6 figures, 7 figures. If you've got those kind of funds, then day trading possibly can work. But you're then really missing out on the real strength of what trading is all about, and that is about empowerment. That is about taking control of not just your money, but more importantly, your time. So if you are making money from day trading, you're sacrificing the time by sitting in front of the computer. In addition to that, I would say that even if you are making money from day trading, you're capping the potentials of what you can make because you're constantly taking profit. You're setting target levels. As a trader, as a trend trader, I don't set target levels. I compound. So as my positions start returning me a profit, I keep on buying or I keep on adding more long positions or short positions depending on which direction I'm going, and the growth keeps on growing. These are the techniques used by Warren Buffett, George Soros, Jim Rogers, the Turtle Traders, Jesse Livermore, John W. Henry, all the guys that we know that have generated a substantial amount of wealth over their lifetime. They've all achieved it through compounding, holding and compounding. Instead of looking to be in and out, they're looking to take a few positions and hold those for as long as possible. And that is the exact same approach that I have to the market. So what I'm looking for are the best setups, and then holding those if they return a profit, and compounding. If the positions go against me, I have a stop loss and I get out. So losses are part and parcel of trading. So let's say, for example, I have 5 trades, and each one I risk 2%. And let's say 4 of them are losing trades, and so that's an 8% hit on my account. I'm not saying this is what happens, but let's say, for example, 4 of them are losing trades, and that's 8% down. That one winning trade that I have, by holding that for weeks and months, that will far outstrip the 8% that I have. Far outstrip it. And I'm talking about, double figures and more beyond that. So all you need is one good trend for this all to really return a profit that you can then eventually be able to start living a lifestyle on. Okay. So monthly, top chart, weekly, bottom left, daily, bottom right. So larger time frames, monthly, weekly, and daily. Now, one thing I want you guys to note is that it says here at the top, delayed 15-minute. Now, the reason why I'm doing this is because there is someone who's on this webinar today. I believe they may be watching through the YouTube channel. I can't always see the names, but there is someone who emailed me saying, do I need up-to-the-minute live data? Now, I use live data, but that's because I've been using live data since 2007. I'm actually using my cousin's e-signal here with his username and password, and he's on delayed data because it's far cheaper. The point is that I'm showing you guys how a delayed data of 15 minutes will have no impact on your trading when you're using the larger time frames. Okay, so if I'm looking at the monthly, weekly, and daily time frame, I don't need up-to-the-minute data. And data which is delayed by 15 minutes is far cheaper than live data. Delayed data costs, I believe it costs around $50 US a month. $50 US a month, delayed data. Me paying for live data, I'm paying close to $200 a month. I can afford the $200 because I've been using that for a very long time. I don't want to go to delayed data purely because I've had live data for a very long time. But new traders that come in, and I encourage them to get good software, they don't need to get the live data. They just need to have delayed data and then the right proprietary software tools that can then help them to extract profit from the market. And those proprietary tools are what we use here at the Dynamic Trader. That's the key to good trading, not the data prices being up to the minute. It's the software tools that you have that help to highlight opportunities. And I share some of these tools in the webinars that I do. So if I start with the monthly time frame, you can see one of the first tools I have are the major pivot levels. So the red and the green. So the red are major pivot resistance levels and the green are major pivot support levels. So the tool that I have will automatically detect these pivot levels and then highlight them as major levels of support and resistance. Now the logic and the algorithms behind these support and resistance levels are all explained to our community members. Okay, in addition to that, I have the pink lines. So the pink lines represent the high, the low, and the closing price of 2016. So that's the highest price of 2016, the lowest price of 2016, and the closing price of 2016. Now, why are these levels important? Because as a trader, what I'm looking for are environments that have more chance of returning me a profit than a loss. What we're doing is playing on probabilities. So I'm looking for high probability environments. If price is trading inside of the pink lines, as you can see here, so here's the high and the low. So this is effectively the range of 2016. And when I say 2016, guys, I mean the calendar year, January to December. So that is the high and the low of 2016. We can see that price is just consolidating. It's just going sideways within that range. Anything within that pink, anything that it's any instrument, whether it's a stock, a currency, or a commodity that is trading inside of those pink lines, I'm not looking to execute trades. What I want to see is price trading above the high, giving price a bullish bias, or below the low, giving price a bearish bias. And so that's how quickly I can then go through a watch list. So if you look at the Aussie dollar, US dollar, it's inside the pink lines. I'm not really interested. If we go to the Aussie dollar, Canadian dollar, you can see inside the pink lines, I'm not really interested. Aussie dollar, Swiss franc, again, trading inside the pink lines. Now, this is looking interesting because it's slowly starting to push its way up. So if you see here, price is now pushing its way up. The high is acting as a level of resistance. This level here is acting as a level of resistance. If it breaks through these levels of resistance, then I may start looking for long opportunities. And look at the space to the upside. Once price is in the trend, what I want to see price then do is move towards round numbers. So 0.8, 0.9, 1, 1.1, so on and so forth. In currencies, round numbers, the distance between round numbers are 1,000 pips. Now, if you aren't aware of the significance on round numbers, then I would suggest brushing up on it. So if we look at something like the euro dollar, if you look at this high points here, 1.6, round number. If you look at these two peaks here, 1.5, round number. Now remember, these aren't hard levels, these are zonal areas. 1.4, round number. If you look at this whole floor, 1.2, round number support level. If you look at this area of consolidation, it's at 1.1. If you look at the lowest point on the chart, 0.8. Think of it like this. If you are jogging and if you get past 10 kilometers, you're going to try and target 15 kilometers. Psychologically, that's what we do as humans. 15 kilometers, 20, 25 kilometers. So you start jogging, you get past 10, you hit 11, you hit 12, you hit 13, 14. Right, now you're at 15. When you get past 15 kilometers, you're thinking, I'm going to hit 20. However, you can feel your body tiring. So you get to 16, you get to 17. Now at 17, you're knackered. But you've gone past 17. You're at 17.1, 17.2. You're not suddenly going to stop. What you're going to do is you're going to try and at least target 18 kilometers. You may not get to 20 kilometers, but you're going to try and get to 18 kilometers. These are psychological levels that price likes to move towards. It's the same thing with what price does, because it's human emotion that moves price. Then human emotion is going to move price to levels that it's familiar with, and those are round numbers. So if you look at this area of consolidation here, with the euro dollar at the moment, I'm flat. what I'm looking for is a breakout. As the trend prior, which is the last time I traded this, you can see very profitable trend, 1.4 resistance all the way to 1.1 support. So that's a move of 3,000 pips, over 3,000 pips, really 3,500. But the point is 3,000 pips. Through compounding, I extracted just under 16,000 pips over a 9-month period. So I compounded all the way through. I held my positions for 9 months, and I extracted just under 16,000 pips over a 9-month period. And on this pullback here, I got stopped out. And since then, the market's been in consolidation. And you can see how it's struggling to break through this support level. What I'm looking for is a breakout. Now, as the trend was bearish before the consolidation, I'm looking for a breakout to the downside. And I want to see price move towards 1, 0.9, 0.8. That's if the breakout happens. It's not guaranteed to happen, but that's if the breakout happens. The breakout could easily happen to the upside. If the breakout happens to the upside, then 1.2, 1.3, 1.4, 1.5, so on and so forth. At the moment, we're standing aside. Now, if we go to the weekly, we've got the 200 moving average and we've got a trend filter. So if you can see, I don't have your standard red and green candles. I have areas of red, areas of black, areas of green. So below the 200 moving average, I want the trend filter to be red, and that is on the weekly and the daily time frame. So if I just move it back, I want price to be below the 200 and predominantly red. Now, of course, there'll be areas where the trend filter turns black. That could either mean a consolidation or a pullback. So you can see how price does a pullback and then continues, does a pullback, then continues. If I do get the odd speck of green, I'm not too worried. But predominantly, you can see it's red. So what I'm looking for between the weekly and the daily time frame is alignment. So I want the weekly to be below the 200. I want the daily to be below the 200. And I want the trend filter to be red on both time frames. If I'm in a bullish market, I want price to be above the weekly 200, above the daily 200, and I want the trend filter to be green. So to give you a good example of that, let's have a look at the Turkish lira. I am actually long on the Turkish lira at the moment. So if we have a look at the Turkish lira, we can see that the Turkish lira is trading above the high of 2016. So it has a bullish bias. Look at where it's finding resistance, round number 4, just like what we've gone through. Okay, just because it's finding resistance doesn't mean it's the end of the trend. This is what a lot of traders need to really start becoming familiar with, that price isn't going to shoot off in one direction. It goes in a direction, but there's pullbacks within that direction. Excuse me, there's pullbacks within that direction. At the moment, this is nothing more than a bit of a pullback because 4 is acting at a level of resistance. And if you look at how this particular currency reacts, we have a consolidation. 2 is the high of the consolidation. 1 is the floor of the consolidation, approximately. When it broke out above 2, came back to retest it, break, retest, there's your leg up. Then it came to 3. Look at what it did around 3, it consolidated. Then it decided to make another move up. It came to 4. Now it's in a little bit of a lull. This doesn't mean it's the end of the trend. If it really starts weakening, then yes, potentially. But for now, I'm still holding my long positions. Above the weekly 200, trend filter is green. Now, if we go to the daily, you can see that the trend filter is alternating between red, black, and green, suggesting a consolidation. But if you look at the larger time frame, which is the weekly, it's still green. So as long as the larger time frame remains green, I'm not worried about the noise that's being produced on the daily time frame. Remember, there are a lot more candlesticks on the daily time frame. So if there's more candlesticks, there's going to be more noise, and the trend filter is going to change more regularly. Whereas if you look at the weekly time frame, it's just solid. And this is the advantage to having good tools. Having the right understanding of price action first and foremost, the natural features that I've just covered, but then also having the right tools that help make the process more pleasant. Too many private traders do not invest into trading, do not have the right tools for the job, they don't even have the right knowledge for the job, and then they're trying to make a career from trading based on really a weak foundation, and then they question why they're struggling. And what they usually then do is then question their psychology. Their psychology must be wrong, and then they start going down the route of seeing psychology experts and reading about psychology, rather than thinking, well, hang on, maybe my system is wrong, maybe my approach to the market and my understanding of the market is wrong. It's a really it's a wrong approach. People need to reverse their whole approach to the market. Okay, so the Turkish lira is a currency that I'm actually long on, and I've been long on this since around 3.3, around this level here. I've got, I think, 3 or 4 positions running along the length of this trend, and my stop loss is in play. So if this weakens too much further, I will get stopped out. But my point is that you can never predict the end of the trend. Potentially what we could be seeing here is an inverted head and shoulders. So left shoulder, head, right shoulder, and then a continuation. If we do get an inverted head and shoulders pattern, that would be significant, because a confirmation of a head and shoulder inverted head and shoulders pattern is a continuation pattern of the bull trend. Of course, this could just end up being a messy consolidation, or this could pull back continuously towards the 200 moving average, in which case I have a stop loss in play and I get out. I'm not worried about the profit that I'm going to give back at the end of the trend, because you will always give back profit. It's not about how much profit you give back. It's what you've locked in, and the profit that I've locked in along the length of this trend is far greater. Just on this single trend is far greater than what any institution would give me. And I'm talking about a bank or a hedge fund or any of those institutions of sort. Even by giving back profit along this at the end of this trend, from this point here to this point here, I've made more profit than what a bank or an institution would give me. And that's what I focus on following my process, focus on doing the right things rather than focusing on the money. And I don't need to worry about giving profit away when I have stocks like Nvidia skyrocketing. So I've been long on Nvidia since $40, since price broke this bar here, since price broke and closed above $40, which was in May of last year. I'm still in this. I have multiple positions running. We've got earnings out today, which we'll see the impact tomorrow. But this has been the best performing stock of 2016. If you look at this logic, it's exactly the same. Above the weekly 200, look at the trend filter. It's remained green throughout all of these pullback periods. The trend filter has remained green. And if you go to the daily, above the daily 200, and if you look at how linear the trend is, a very neat linear looking trend. Yeah, there are little messy periods. At the moment it's gone for a bit of a lull or consolidation, but look at the natural features to it. Pullback, where did it pull back to? $100, significant. Double bottom. Now a double bottom confirmed at this point here when we had the neckline broken. A double bottom is a continuation pattern of the bull trend. So we've had a trend in play, pullback, double bottom, confirmed, continuation. Now, of course, until it actually breaks out, so what we now need to see is price break and close above this resistance. It tried to do that on Tuesday. Little pierce up, but then was pushed back down. You can see that price is just struggling. It's in a little bit of a mini consolidation. It filled the gap yesterday. So I don't know if you guys trade stocks, are familiar with stocks, but what can happen is that if price gaps, you can see here there's a gap. If price gaps, then what can happen is two things. Ideally, we want to see price continue to the upside. So if we go back to this point here, you can see here how price gapped and then continued. Gapped and then continued. Okay, that's what we're looking for. Now, what can happen, and here is a good example, is that if you have gaps like we have here, price can pull back often to what is called fill the gap. So here it's fill the gap. What we don't want to see is, even though it's filled the gap here, what we don't really want to see is price move back towards $100. What we want to see is a breakout and a continuation. A breakout on a gap is stronger than a normal breakout. That's one thing that people should become familiar with. So a breakout on a gap, you can see that this breakout above $80, a breakout on a gap is stronger than just a normal breakout like you have here. Okay, so for me personally, foreign exchange is very dead at the moment. There's not really much going on. Everything just seems to be going sideways. I mean, the pound currencies, you can see for yourself, it's not really doing much. So if you're focused purely on foreign exchange, then you are really missing out on far better opportunities on, in other markets. So if we have a look at some of the UK stocks that I'm trading, Same approach, guys. It doesn't make a difference whether we're looking at currencies, whether we're looking at stocks, whether we're looking at commodities. A chart is a chart. And this is something that people need to realize. If I remove this, where it says CAS London Minerals, if I remove this symbol and you did not know what the chart was, you should simply be able to look at that and go whether it's tradable or not. That's what trading is. Too many people have attachments to trading. Too many people are loyal to the euro dollar, are loyal to gold. The market has no loyalty to you, yet you are loyal to the market on instruments that aren't paying you the way they should be paying you. Why would you want to stay loyal to that? So what you want to do is move to markets where the money is far easier to make, where the money comes to you rather than you having to chase money. So one of the stocks that I'm in is CAS Mineral. This is a fairly new stock. I've only been in it since, I think I've been in it for about 3 or 4 months. So price broke above the major pivots, and you can see now broke above the £4 mark and is now trading above the £5 mark. Look at the move potentially to the upside. Look at the risk to reward. That is one of the things that you must learn to think in terms of as a trader. It's one of the skills of being a trader, thinking in terms of risk to reward. Too many traders think in terms of emotion and fear. A lot of traders think in terms of certainty that this will happen. It's incorrect. You want to be mechanical, you want to be robotic. You also want to think in terms of risk to reward. Small risk for a huge reward to the upside. Approach is exactly the same. If you go to the monthly, the approach is exactly the same. If I just open this up, you can see that price is trading above the high of 2016. So price has a bullish bias. So I'm looking for long opportunities. If we go to the weekly, above the weekly 200, trend filter is green. And if we go to the daily, above the daily 200, trend filter is green. Now look at this chart pattern. I don't know if you guys can see this chart pattern. But what do we have here? We've got a head and shoulders. So you've got a trend. Sorry, excuse me. Not head and shoulders at all. We've got a trend. We've got a cup and handle. Cup and handle confirmed. Look at what happened next. Breakout. Retest. I'm just going to expand this so you guys can really appreciate what I'm talking about here. That we have the resistance of the cup and handle. When a resistance level is broken, it becomes support. And what price usually likes to do is retest that and then bounce off support. That's exactly what price has done. So you've got your cup and handle. You had a break, retest, and then a continuation. So the trend filter is green and it's above the 200 moving average. This is a very, very good looking stock. I believe I've been in it since about this breakout here, if I remember correctly. It could have been a little bit earlier, but I think it's around the 300 mark, the £3 mark. That's where I've got in. Now look at what happened. I got in, price pulled back against me. I didn't get stopped out. I held my positions based on my understanding of potential support and resistance levels. Held, and now those positions are going, and I've now got further compounds. The growth that I'm achieving on this is significant. And I've done very, very little work. All I've done is applied my system and my strategy, but also brought a very mechanical and unemotional approach to it. Another good-looking stock is, again, another UK stock, and one that I've been in since last year, is Burford Capital. Massive growth to the upside. I mean, it broke out around £1.60. It's now valued at over £7. If you look at the weekly, above the weekly 200, trend filter predominantly green, obviously the odd bit of black. If you look at the daily, above the daily 200, trend filter is predominantly green, but the pullbacks are a little bit messy. But nonetheless, as long as price has the trend filter has remained green on the weekly, I've not had to panic. When both have turned black, then I may start thinking about tightening my stop losses. But I don't tighten stop losses straight away because I don't want to get spiked out by the odd 1 or 2 pips only for the trend to go in my favor. A lot of the times I use mental stop losses. If you're not aware of what mental stop losses are, a mental stop loss is my physical stop loss, let's say, could be here. So in my broker account, my physical stop loss could be somewhere here. But as a price then develops, I have a mental stop loss in my head. So in my head, I'm saying my stop loss is here, my stop loss is here, my stop loss is here, my stop loss is here. So if price does come to that, so let's say, for example, my stop loss was here. So let's say my stop loss was here, for example, just for argument's sake. You can see that price broke through that and then reversed intraday. So if this was a physical stop loss, then I would have been stopped out only for the market to then go in my favor. So what I do is I usually wait. I have a mental stop loss, and then I'll wait for the market to close at the end of the day. And that's when I will then decide whether I'm going to tighten my stop loss or exit my position. So if this red bar remained a red bar and closed below this stop loss, it's then I would look to close my position. And sure, I may give a little bit back. I may give a little bit more back than I would like, but this is just one trade in isolation. You can see that if one trade, I may give a little bit back more to the market. The ones that don't, the ones that would have spiked me out, but then continued in my favor, I make far more profit. So this is my point, guys. Think in terms of risk to reward. Don't fear giving back a little bit of profit to the market, because you have to. If you want to see a continuation, you have to risk potentially giving a bit back to the market. Okay. In terms of currencies, not much going on. There really isn't much going on. I mean, let's have a look at the Euro New Zealand dollar. This is a position that I've got a very, very small position on. As you can see, it's gone against me. And I'm not worried about this. My stop loss is wide. It's up here somewhere. But if you look at the movement, you can see that every time it breaks out, there's a pullback to it. So the fact that this is pulling back is not of anything of concern. It's not unusual, because it's happened throughout the trend. Hence why I'm using a wide stop loss. But if you look at the bigger picture, below the weekly 200, trend filter predominantly red, although it's turned black now. It wasn't black. It wasn't black yesterday or 2 days ago when I entered. It was a red bar. And below the daily 200, trend filter is now black. Remember, what is a good trade? A good trade is one where you follow your trading plan regardless of the outcome. If this ends up being a losing trade, I'm going to lose 1% because I've only got 1% on risk here. It's tiny. It's absolutely insignificant compared to the profit that I've accumulated across all the other winning stocks that I'm in. But this is my point. You have to risk to make money. It's how much you risk that will separate you from the guys that are in this game for the long run and those that continuously blow accounts. If you're blowing accounts, first and foremost, you've got something seriously wrong with your trading. In 10 years of trading, I've never blown an account, because when I started trading, I found a mentor from the very start, and he explained to me how to manage my risk, which is essential. So in 10 years of trading, I haven't blown an account. Now, the way you want to look at this is most startups fail in the first year. So if you look at yourself as a startup, your trading career as a startup, if you've blown a trading account, regardless of how big or small it is, then you have to question whether you have approached the market in the right way. Blowing trading accounts is a totally unnecessary part of trading. And if you're trading with £50 or £100 of sorts in your trading account, then there is a very good chance that you're going to continuously blow trading accounts. You need to have at least £1,000 in your trading account for good risk management. At least £1,000. If you don't have that, then you're going to continuously struggle. And you're then playing right into the hands of the brokers. The brokers are not there for your success. The brokers are there for their spreads and their commission. They may put their arm around you and say, oh, you know, it's really important to look after our customers. Yes, but ultimately what they're looking for is volume. The more you trade, the more spreads and commission they make. Okay, in terms of the pound currencies, I'm still short on the pound Aussie dollar. I've been short on the pound Aussie dollar from here. I compounded here. You can see now that it came towards this whole support zone and it's bounced to the upside. Again, not really going anywhere. What we want is a movement. We want a big movement in a particular direction. At the moment, it's just going sideways. I know I've got in here and I've got in here, but what I'm really looking for is the market to break this pivot support level. That is what I need to see. I need to see price break 1.6, which is the round number. Again, look at where price is consolidating. 1.6 as a support level. It's not a random level. But this trend, for it to be in a continuation, we need to see a break and a close below this pivot support. So pound Aussie dollar, I am short, I am in profit, but we need to see a reversal back in the direction of the trend. Pound New Zealand dollar, I'm also short on this. Again, pound New Zealand dollar, I was short around this point here. We can see now again 1.7 acting as a level of support. What I want to see is a break and a close below this pivot support. As soon as we get a break and close below this pivot support, that will be a continuation of the trend. May never happen. If it does, I will compound. If price continues to go against me, then I will exit from my positions. Okay, that's really everything that I wanted to talk about today. There aren't any questions coming in. Okay, no questions coming through. Okay, that's fine. I am going to quickly direct you all to my social media pages. So if you bear with me 1 second. Right, administrator, can you see my social media links, please? Yeah, fantastic. Okay. So as already mentioned at the start of the webinar, if you're based here in the UK and you want to attend a live day of training, if you really want to get beyond that plateau and learn techniques that are far more relevant to you as a private trader, then attend this live day of training. It's £195 plus VAT for the day. Link is zaheer.live/seminar. If you want the online version, zaheer.live/webinar. Okay, if you want to email me, simply email me zaheer@zaheeranwari.com. So it's my name, zaheer@zaheeranwari.com. If you want online blogs, which I update on a regular basis, then please check out my Medium blog site. I update pretty much daily, so you can see I did something on NVIDIA. But yeah, a lot of goodies on there, a lot of recognition really coming through on my Medium blog. I hit 1,000 followers yesterday, and that's within about a month. So you can see that the following is really starting to pick up. If you want to add me on Facebook, guys, please feel free. Just search for me again via my name. I've got a page as well called City Trader Lifestyle. So if you put this URL in, let me just delete that. Okay, so facebook.com, City Trader Lifestyle, or search for a private trader in London. I do a lot of Facebook Lives. My blogs go all up on there, but I do, where are we? Yeah, there we go. So I do Facebook Lives and I talk about various different aspects of trading. I do those a few times a week. I also do Periscope. So through my Twitter, if you search for me on Twitter, you can then also add me on Periscope. I actually prefer Periscope. There seems to be a lot more interaction. So please search for me on Periscope. If you're on LinkedIn, again, search for me on LinkedIn via my name. And I am on Instagram as well under fx.mentor on Instagram. Okay. So once again, zaheer@zaheeranwari.com. Training session, zaheer.live/seminar in London. Online, zaheer.live/webinar. Okay, guys, thank you all very much. Administrator FX Street, thank you. Have a lovely end to the week, and I will see you next week. Take care. Bye-bye.